Okay, so good morning, guys. How we doing? All right, so this is another week of trading activities in the market. Though this week was not really very clear at first for me, but my expectations were met. All right, so I would like us to see something on the. I'd like us to show us something on the one week time frame first. Before I pull in any trade, I like to see what the daily time frame, the weekly time frame, and the monthly time frame is saying, because the meat of what will happen in a trading week is the secret is in the monthly time frame. So it is very paramount to check the monthly time frame, check the weekly time frame. Let me remove these execution stubs here. Check the weekly time frame, check the daily time frame, check the 4 hours time frame. There, I narrow it down to my 15-minute time frame. Alright, if you look at this weekly time frame here, this was last week price action, this was this week price action. Now this last week price action, it came down after sell side has been taken here, right? It went up, broke this swing high, right? So it came down. Is that not a buy program? Sell side taken out, swing high taken, right? Is that not the model that we'll be working on? This is a fair value gap. What I want to see is I want to see if this bullish order block, this is a bullish order block, if it's going to hold price. I want to see this candle, this last week candle. I wanted to see it to close above this candle, and it did. If it closed below this candle, then I would not be looking for any buys program at all. Well, the only thing I'm looking for is a what? Is a sell program, because this order block, this PDRA refused to hold price. But last week as did, it's quite held price well at, it kept price at B, and I love to see it. So this week I was looking for bullish move. The only thing I didn't really get was that I was hoping that Monday and Tuesday would be down, then Wednesday, Thursday, Friday would be a bullish day. That was the only thing that was not really perfect with my analysis. But let us go down to the 30-minute time frame. Okay, let me go to the 4 hours time frame. So I've shown you that that was what I was looking at. So this was this was that price leg that entered that bullish order block on the weekly time frame. Sell side taken out, bullish order block on the weekly time frame. This is swing guy taken out here. So we are now bullish also on the 4 hours time frame, confirming our analysis. So the only thing we need to do now is to find a way to enter the market, because we know we are bullish. Now look at this now. Swing guy, sell side was taken, market took sell side and tapped into the weekly time frame. Swing guy was broken here. From this price leg to this price leg, is it a fair value gap? Yes, this is a fair value gap, right? So you can, as market dip back into this, you can buy in this fair value gap, put your stop loss under this. Why? Because this is what bullish order block. So price should not trace back down here, right? You can measure this too. This retracement here. This is what ICT consequent encroachment of this week, 50%. Pow. You can still buy it, right? So and ends the bullish move. When price retraces into this fair value gap, I would like to see a sell, but that's not what I want us to focus on. So what I want to show you is something called ICT inversion fair value gap. That was what I used to enter yesterday's trade. And if you want to see if I really entered the trade, there is a Telegram group channel link on my YouTube channel. Check it and join the channel. You will see that indeed posted the trade there that I took it. I think I made 100 and something pips. Alright, so now I already know we are bullish, right? So this was that fair value gap on the 4 hour time frame. You can check it also. This was one that tapped into it. Now I talked about a 4 hour consequent encroachment. This was a retracement into it. The brackets retraced into the consequent encroachment of this week. Yeah. Sell side was also taken. You can also see the micro break of structure here again on the 30-minute time frame. Break of structure, right? Fair value gap, right? But this one I want you to notice. From this low to this high, is it a fair value gap? Yes, there's a fair value gap, and this is the fair value gap. But this fair value gap is in premium. What do I mean by premium? Let's take our Fibonacci, put it here, and put to this high. This fair value gap is above the 50%. I want something below the 50%. Then you can go to your lower time frame, you see a suitable fair value gap. But what I used was something called inversion fair value gap. Now, this fair value gap is an inversion fair value gap. What do I mean by inversion fair value gap? On a normal day, this fair value gap is a bearish fair value gap because market is a red candle. You know, most of the time red candles are bearish fair value gap. Like markets would ideally enter them and goes back. But in a case where this fair value gap is violated because of market structure, this fair value gap this bearish fair value gap can be used as a bullish fair value gap. So that's what we mean by inversion. The fair value gap that is supposed to send market lower is now sending the market up. And what's the idea behind it? The fair value gap is violated. I hope you see that very carefully. That's the idea. Because I know that this fair value gap is not going to send market lower. Why? Because from our weekly time frame, 4-hour time frame, we are bullish. So I know this fair value gap is not going to hold the market and send it down. This fair value gap will be violated, lead to a break of market structure, then to be traced back into and used as a support. And can you see very perfectly? I discarded this fair value gap and I used this one. Very perfect. Come inversion fair value gap and it sent the market high. So your stop loss also can be here or under this low. Then I took the trade and entered within 2 hours. Can you see the move? So until we meet again next time, backtest the thing I've taught you, study them very well, and be the best at what you do. So take care, everybody.